What's up, everyone? What say you coming at you? We're Progress Realty Partners. My name's Dan Salonis.
Adam Dickert here.
And what we're doing is simple. Every week, Adam and I on our website, Progress Realty Partners, prp.us, we get investors that send in different questions. They might put it in the chat. They might email us different situations, investing specific, property specific. So they got questions. We've got answers. We're going to post them right here in our segment called What Say You? So, Adam, we got 4 questions. I got 2. You got 2.
And I'm going to start it off for you because I actually really like this question.
Go ahead. I would love for you to start it off. What do you got?
Larry from PA. Don't know who this is, but Larry. When evaluating retail deals, how do I underwrite for CapX items? I think this is a very important question. So, Dan, what say you?
How do I evaluate for CapEx?
CapEx, capital expenditures.
CapEx, okay. Great question, Larry. So it really depends on what the condition of the center is in, right? So when you look at how old the property is, what kind of shape it's in, the parking lot, the roof, the structure, the HVAC systems. Normally, and I don't know how big the property is you're buying, but we would typically underwrite on a brand new property, maybe 10 cents a foot to 25 cents a foot. If you're dealing with an older property, it could be $1 a foot. It could be $2 a foot. So really what you're going to have to do is get a PCA, right? Get a property condition assessment, see what kind of shape the roof is in. You could visually see the parking lot. So if there's cracks and stuff, if it looks old, you might need to reseal it. Could need to restripe it, might need to remill it. All these things obviously cost money, anywhere from 50 cents to $3 a foot. So it all comes down to how old the property is, what kind of condition it's in. I would say if it's an older property and you want to underwrite conservatively, underwrite for around $1 a foot at least, depending how big it is, but could be more. So really depends.
Fair, very, very fair.
All right, I got, what is this, Hector from Hector from Georgia.
Hector.
He said, someone offered to lease my vacant retail space for $18 a foot. I'm asking 21. Should I accept their offer or wait it out? So, Adam, what say you?
All right, Hector. First question: why are you asking $21 a foot? It all comes down to the market, right? What is the market rate? Is the market rate 50 and you're asking 21? Is the market rate 15 and you're asking 21? Excuse me. And also, so the market is obviously the biggest factor, but also your occupancy in the actual center itself. If you're pretty leased up and you have a little bit of leeway there, you have a little bit of leverage, you can kind of pick and choose, the exact terms, the exact rate, and be a little choosier with the type of tenant and the terms that go with it. By all means, maybe hold down a couple more months for $21. But also, how long have you been waiting for a tenant? How long has this been vacant? Has this been around for 5 years and the guy's finally coming with $18 a foot? I say take it.
Okay, yeah, good point. So it depends on how long he's been waiting, depends on the market, a couple different
very
factors.
Situational.
All right.
Very, very situational. Right.
What do you got for me? By the way, as I'm sipping on what we got, a Jetty Session IPA in a New Jersey beer right here. Delicious. Phenomenal.
Thanks for the beer.
Yeah, as soon as you lose.
See, I did it again. I forgot to write down who this one's from, but
classic.
It's a good question. I'm deciding between 2 different tenants to lease my space to. First one, higher rent, shorter term, or number 2, lower rent, longer term. How do I decide?
Okay. Good question. First thing I would ask if I'm coaching you on this scenario is what's your strategy with how long you're going to hold the property for, right? What's your time frame? If it's a value add play and you're just looking to lease up some spaces, bring that 80% occupancy to 90, 95%, 100%, and then sell it, well, then you could take a shorter term deal. If you're more on the long-term outlook and you're going to hold this thing 10, 15, 20 years, I mean, I would go for the longer term deal, a little bit less rent because it gives you more stability. So really it comes down to what is your goal, right? What are you looking to achieve out of the property? Is this a short-term value add flip or is this a long-term hold for you? Ultimately, stability, if it's a long-term hold, is the name of the game. I'd rather lose out on $1 or $2 a foot and get an extra 3, 5, 7 years on a lease with a good tenant than take a shorter-term deal with less rent on potentially a riskier tenant. So it comes down to what your strategy is. But ultimately, really assuming, let's say it's a 10-year hold, I'd go for the longer lease, take a couple bucks less on the rent.
Okay. The only thing I would add to that, only because we always look for this rollover risk, right? We don't want all of our tenants rolling over in the same year. A little risky, so try to diversify yourself a little bit if you have the opportunity.
Yeah, it's a great point. All right, Adam, question number 2 for you. I have an office tenant whose lease is up in 2 months. They want to stay, but already told me they can't afford their current rent. Would you kick them out or renegotiate with them? Adam, what say you?
So it's a pretty good question, right? 2 months left in the lease, no options, I'm assuming, or any sort of renewal coming up. I would start, start marketing the space, right? I wouldn't kick them out if they're still paying rent. As long as they're still paying rent, there's no need to kick them out. But can start marketing that space, try to bring in a new tenant, but also in the meantime, try negotiating with them. They can't afford the current rent. What can they afford? What can you as a landlord afford to do to help them stay in your location and also continue to get you income? So no, I wouldn't kick them out immediately or at all, really, for that matter. Let them continue paying rent, collect some income, but definitely have a plan B for 60 days down the road because it's coming up faster than you realize.
Yeah, great point. So guys, that was it. I mean, that's our 4 questions. That was our 4 answers. This is What Say You with Progress Realty Partners. My name's Dan Salonis.
I'm Adam Dickert.
We'll catch you guys next time when we got more questions and more answers.
And beers. We want beers.
Beer.